Speaking of reopenings, Starbucks beats by 9 cents with adjusted 62 cents a share. Revenue was a little shy due to what we now know are obvious points of weakness around the world. Starbucks President and CEO Kevin Johnson joins us this morning in another First on CNBC interview. Kevin, good morning. Great to see you.
Good morning, Carl. How are you this morning?
Pretty good. We're grateful for the time. I mentioned that international weakness. I mean, there obviously are some difficult spots who are still grappling with reopening and the pandemic. But what specifically did you find worrisome ex-U.S.?
Well, if you look at this last quarter, it was a solid quarter, and it really demonstrates that vaccinations are the unlock for what we call the great human reconnection. And we saw that unfold across the United States. Now, certainly, as you point out, Europe had some outbreaks, and much of Europe was in lockdown through parts of this last quarter. And we even saw some COVID restrictions in China where they restricted non-essential travel throughout the Chinese New Year. So that put a little bit of headwind. But overall, we had a great quarter. We had a strong beat in earnings per share, as you highlighted. And we've raised our guidance, our full year guidance for revenue, for earnings per share, and for operating margin. So very positive signs. But the unlock is getting vaccine, getting shots in arms. And if you look at what happened in the U.S., that's exactly what unfolded. The great human reconnection has begun.
The guidance outlook, you're right, on those metrics is stronger. It has some on the street wondering at what point would you be willing to boost some guidance on comps themselves?
Well, we guided, pretty strong comps and a wide range of comps for this year. And, we're sticking to that. Clearly to deliver on this revenue guidance, it's going to be at the higher end of the comp range that we've given. But I think we've got very solid evidence. If you just look at the United States, the United States posted, I think a 9% year-on-year comp. And we even commented we exited the quarter with an 11% two-year comp. So think about that. 11% two-year comp growth over FY19 is kind of like a 5 comp and a 6 comp. And so you look at what's happened. We're just seeing that momentum build in the U.S. And as vaccinations take place around the world, we're seeing the same phenomenon happen. So we're pretty optimistic about the back half of this calendar year, or fiscal year.
Shepard Smith here. Thanks for watching CNBC on YouTube.